Hi there, Serial Trader here. I'll do an update on the major US indices, starting with the wave chart here on SPX. Now, for my last video on Thursday there, I was proposing that we may have a significant bottom either in place or nearly in place, and we could have a potential reversal day on Friday, which was yesterday. And so far that's playing out. We have a significant move off the bottom. Now, in the regular session, we did not make a new low. We tested the low of Thursday on Friday. It held. So on Thursday, we made the low here on SPX at 24.78. And then on Friday, we tested the low. We made a higher low at 24.92. So now the question is, how significant is this move up that we started there? Is it going to be something that turns into a 5-wave sequence like this, which would certainly bode well for looking for kind of a corrective pullback and then trying to get long for a larger move? So do we get a 5 waves off the bottom, or do we just get an ABC like this and then dump back down and make new lows? And I'd say right now it's not a high confidence proposition just yet, but we definitely know what to look for. Now, I can say from the all-time high, we have a very nice looking ABC zigzag currently, and I'm still leaning towards this just being an A down, B up, C down, and that's potentially, the end of this pullback, and we have at least a significant rally, whether it be to a new high or if it's going to be a more complex decline that has further to go. We still need some sort of rally. Say this is an ABC down for a W, we rally up in an X wave and still have another Y wave down to new lows. That's certainly possible. But so far it is a 3-wave decline from the top, even though it is very severe and fast in time compared to about almost anything you can find historically. But just going through it, if you just stick to the basics, looks like we just have a 5 down for A or 1, 3 up for B or 2, and now it looks like we have our 5 down for C or 3. Now, this could still turn into a 1, 2, 3, 4, 5 down, but here's a key level that we have to, not test here. So here is the termination point of either wave A or 1. So if this little rally up we're getting here is just going to be a 4th wave that leads to another 5th wave down, we cannot violate this level, and on SPX here that is 28.55. So if we get above 28.55, you can no longer consider this to be a 1, 2, 3, 4, 5 down in progress. You have to fully accept that it's an ABC down, potentially of a larger corrective sequence, but maybe it's just all of this pullback ABC down and that's the low for the year. You can't discount that either. So that's the key level as far as throwing away the 5-wave decline possibility. You break 28.55 and this is not a 5-wave decline, which is certainly less bearish longer term if we do not work towards a 5-wave decline. Now, another thing, so I think I've shown all I wanted to here on the 1-hour chart. Let's go to the daily chart. So we did fill this gap here that we made on Monday, and let's see, or sorry, this was Thursday, so that was the Wednesday to Thursday gap. We haven't filled the Monday gap, but the Wednesday to Thursday gap, we filled that. So again, we still have another gap up here and another gap up here as well. So still 2 gaps overhead unfilled. And certainly if we go up and fill either one of them, we're going to invalidate the 1, 2, 3, 4, 5 scenario, because again, we'd get past that 28.55 and invalidate that potential. But if you look at this here, I mean, that bullish divergence on the daily, that's been basically foretelling that we had a significant bounce coming. Basically waning momentum even though you're making lower lows in price. That's always a precondition. So that worked out there, bullish divergence, and now RSI is turning back up on the daily. likely has further to go. The same happened on this 4-hour chart. You had the bullish divergence, waning momentum, and now we're turning back up again. And the hourly chart as well, but I don't need to go through it all there. So really, big picture, we just have so far a 3-wave decline, largely contained within this parallel trend channel. We did briefly spike out of it, but came right back into it. So if we really can't break down any further from here, then you have to acknowledge we might just have a 3-wave correction from the all-time high, and now we're going to start going back up again in a meaningful way, possibly up to new all-time highs. You just can't discount that. It might seem highly improbable given all the headlines you're seeing, but prepare to be surprised. That's the number one thing here. In fact, so many people are calling that this is the absolute, multi-year top. Maybe they're right, but I'm not convinced yet. If we come up here and fail again and make it a 5 waves down, okay, then we got something probably a lot more substantial to the downside developing, but I'm just not ready to go there yet. And what else was I going to point out here? Oh yeah, so on the futures chart, so on ES here, we have a very nice, and this was kind of the thing that was telegraphing we needed one more leg down there when I was looking at one of the videos last week. I don't know if it was Thursday's video, but maybe the one before that. Maybe on, I don't know if it was Tuesday, something like that. Anyway, this was telegraphing that we needed one more leg down. Well, we certainly got it. And actually, we went as low as 23.80 overnight on the futures. So that was quite a dip. And then had a massive recovery off that level. Even before the cash open on Friday, the futures were already coming back very strongly from that level down there. So we have a very complete looking 5 waves down for possibly wave C on the futures as well. So that's good. There's no longer a discrepancy between the futures chart and the cash chart. They both count nicely as 5 waves down completed for C. And also one more thing on the futures chart, just an unlabeled candlestick chart here. So this is a piercing candlestick. So here's that big Thursday candlestick, red candlestick there. And then the candlestick for Friday opened lower, dipped a little lower, and then recovered. And it's not quite a bullish engulfing. If we'd closed above the Thursday open there, it would have been a bullish engulfing. But it's also still a strong bullish signal, being the piercing candlestick. So when a piercing, you open lower than the previous candle's body, and then close up at least above the halfway point of that body. Well, we've certainly done that. More than exceeded the halfway point. So we got a nice piercing bullish candlestick buy signal there on the futures. Just thought I'd point that out because it does look a little different when I get into the candlesticks on the regular cash index. But I think we can probably done looking at these charts now. So if I go to the Thinkorswim candlestick charts, you can see we also have a bullish reversal candlestick there on Friday, and I just thought the futures piercing candlestick gave it a little more context, since we did actually make a new low on the futures, even though the cash chart isn't showing that. But big reversal on Friday. We closed that first gap that we had above us and closed near the high of the day. We're still well below the daily T line, so it'll be interesting if we can get back above the daily T line and stop dumping. That'll be a significant sign here of a change in trend. And again, we have these two gaps above us that probably have a good chance of getting filled here, which if they do, it would invalidate the more bearish 5 waves down scenario. But here's the thing. We had this happen last Friday, not yesterday, but a week from yesterday prior. And we had a nice reversal towards the end of the day on Friday. Things look like they might have a more substantial bounce. And that was this candlestick right here. And then Sunday night, you could see already the futures were down big. We gapped down and ended up having a very negative week. So you can't trust it yet. There's all kinds of bad headlines, hitting almost by the minute. But that'll be something to look for. So if we open Monday, I mean, we can open down a bit on Monday, but as long as we don't open and make new lows on Monday, or say we actually open flat or even higher on Monday, that'll be a notable change in character and perhaps a sign that we can actually trust that we have a more substantial rally underway. Once you start not reacting to those big scary headlines, that's a sign that, okay, sentiment is changing. And again, we can open lower as long as we don't actually go down and make new lows. We still have a potential rally kicking off intact here. So just thought I'd mention that. As far as my positions go, other than day trading, yesterday I didn't make any changes. I'm still just with those two index puts I sold there just to collect the premium. Haven't made any changes to that. And yeah, other than day trading, haven't put on any aggressive long positions yet, but I'm certainly watching. And that'll be a big confidence booster if we don't just dump down there on the opening next week. So we'll see what happens. Weekly candlestick. Weekly looks interesting. So obviously a very negative week, but a very large lower shadow. And we actually did close above the 200-week simple moving average, so that's notable. Obviously intra-week we violated it, but not on a closing basis. And if we look back, let's see here. Let's go back far enough to make this worth our while. So this 200-week simple moving average, ever since our 2009 bottom, once we regain that, we've certainly tested it once, twice, 3 times, but it's largely been a great support kind of metric on that weekly level. And so far, yes, we've severely tested it this week, but again, closed back above it. So if we really can't, on a weekly closing basis, get below the 200-week average there, then I'd say we still potentially have this major uptrend intact. And I'll also just kind of mention, I think I want to pull out a trend line here. So basis the weekly chart, that's our 2009 low right here. And I believe, is this where I drew the trend line to? Let's just extend this. Okay. Oh, no, that's definitely the wrong one. Let's pull this over right to this lower shadow on this week here. And let me just make sure, I grabbed that properly. Yes, I did. Okay. So we have this 2009 trend line, which has largely acted as a nice support level. We didn't quite get down there to touch it. But again, as long as we stay above that, even if we do violate the 200-week average, but again, so far we've closed above it. As long as we stay above this 2009 lower trend line, we, technically, this very long uptrend is still intact, although it's certainly being threatened here. So I just thought I'd point that out on a weekly basis. And okay, we're good for SPX now. Now on the Dow Jones Industrial Average, similar from a directional standpoint, but there are some different kind of violations going on here. So we did break the December 2018 lows on the Dow, although we closed well above them with that big reversal there on Friday. So I'm thinking for the Dow, maybe we got a 3-3-5 expanded flat. And I'm just looking here to see if you can maybe get a 5-wave decline out of the Dow to finish off wave C of an expanded flat. And you can kind of force it here where you got a little 1, 2, 3, 4, 5 down. So, I mean, this could still just be an A, B, C down for the Dow, but the context fits better since we actually made a new low. We have a 3-3-5. That definitely fits well as an expanded flat as far as the actual shape of the pattern goes. And let me just go the weekly maybe. So I'm kind of liking that. Expanded flat, wave 5 and C done possibly. And maybe that's it. Maybe that's it for the Dow. Now the other indices, they wouldn't be an expanded flat. They might just be more of like an A, B, see, maybe we're going to do a DE for a triangle or something on SPX and the NASDAQ. But the Dow, given that it broke that low, kind of leaning towards it being an expanded flat. But we'll have to see. Again, directionally, similar implications. Looks like we have a major bounce underway on the Dow, possibly a major bottom to work with. But again, we'll see next week how confident we can be of that. Now let's see, did the Dow actually fill its gaps? No, the Dow did not fill its Thursday to Friday gap, and that would come into play at 23,328. We've got as high so far as 23,189. So that gap is unfilled, although we likely fill it quite soon. So the Dow obviously has just been showing more relative weakness to the other two indices. That's really the bottom line. Even though it is directionally aligned, it's just been more severe to the downside. Okay, now weekly chart. Dow did close below its 200-week simple moving average. Again, just showing some relative weakness to the others. That's really all I want to mention there on the Dow. Now on the NASDAQ composite. NASDAQ composite, again, if I zoom out here, so far we haven't really gotten anywhere near the December 2018 lows, whereas the Dow broke them and SPX certainly threatened but did not get there. So the NASDAQ still showing the most relative strength, and pretty spectacular reversal candle there. Massive hammer, I guess, or almost a baseball bat, if you will, on the NASDAQ daily candle. And we close the gap from Thursday to Friday. So let's see what happens when we get up here to this daily T-line. Does that act as resistance again like it did up here? Or do we kind of hover around it and then continue up? Or do we just smash right through it? We'll have to see. Weekly on the NASDAQ. Looks like potentially a weekly doji star, so that could be a sign of an impending reversal. Remember, a doji star shows indecision. So you have a big fight here between bullish and bearish sentiment, and this could be a potential reversal candle if we confirm and go up next week. And the NASDAQ, again, showing relative strength even above SPX, didn't even test its 200-week simple moving average. So just thought I'd point that out. And that's all I wanted to mention there on the NASDAQ for now. If we go to the VIX, so VIX made a marginally higher high. We actually got as high as 77.57 on the VIX here on Friday, but we strongly rejected, closed near the lows of the session, and also closed below the entire range of Thursday. So that is a significant reversal on the VIX. We haven't technically broken the uptrend yet on VIX, but that is a big reversal from the highs. So if we confirm next week, continue lower in VIX, continue higher on the indices, then we have maybe not the bottom, but certainly a significant bottom to work with. And that's all I want to mention there on the VIX daily. Now on the VIX tool, so interesting, we ended up making a high on VIX and a high on VVIX at the same time. So there's no VIX-VVIX divergence, but there is a divergence between VIX, VVIX, and SPX. So even though on Friday VIX and VVIX made a new high of this entire move, SPX was unable to make a lower low, and in fact made a higher low and then reverse. So that is the divergence between VIX, VVIX, and SPX. Two made new highs, but the other did not confirm and make a new low, and then reverse strongly. And you can see VIX pulling back quite hard, VVIX not pulling back as hard, but certainly pulling back. So you can see we are getting above, just starting to get above the blue moving average there on SPX. Now we're not below the red moving average on VVIX, but this tool, isn't perfect. And by the time we get a real strong confirmed signal and we get below this red moving average on VVIX, and we get well above the blue moving average on SPX, we got a buy signal. And maybe that'll add some more confidence to act on maybe a longer term position. And by longer term, I mean longer term than a day trade. It'll add some confidence that, okay, we got a major pivot there from the bottom. But again, not quite there. But you can see there are definitely divergences there that argue that potentially a major low has been put in. So that's all I really want to point out on this tool. So yeah, just to summarize, if I do see some confirmation of this bullish reversal on Monday, I think I'll be inclined to put on something and maybe hold it for more than a few hours or a day. But if the rug gets pulled Sunday night and it sticks on Monday and we go down and make new lows, then this reversal's off the table and we're back to waiting and watching again for another potential buying opportunity. But I think that's kind of the way you gotta be leaning into this right now. I mean, there's definitely shorting and longing opportunities intraday. But if you're looking to go short and hold it, you know, for a few days or weeks, I'd be careful here. I think we're going to have a major bounce up even if we do go lower. That's just my current thoughts. Anyway, we'll see what happens heading into Monday and obviously the rest of the week after that. Serial Trader signing off.